we have the daily price chart for DELL Technologies Incorporated, stock ticker DELL. So as we can see here, the stock continues to plummet. We've seen several gapping instances where prices have actually gapped lower. This has occurred even after prior gaps and even after substantial share price losses. So it is clear here that the momentum to the downside has started to accelerate. This is something that we pointed out in a prior video. We suggested that this resistance level, which came in during the June 20 trading session, which came in at 161.52, would be particularly important. And as we can see here, this level has sort of defined, this new downtrend that has developed for the stock. So currently, we really are in free fall here. There's a lot of damage that has been done to this chart, and we can sort of drill in here a bit to get a closer look at these declines specifically. So here we can see that this major price gap initially occurred following the May 30th trading session. This price gap really, let's try to get some exact numbers here. So the bottom of this price gap comes in at 165.60, and then the top of the price gap is not really seen until it's more than $20. This is a price gap of more than $20. So that's a fairly large size price gap, especially for a stock that has the market cap of a company like DELL DELL Technologies. So this is a major move lower, and then following this, we really didn't see much of a recovery here. We did roughly fill in this price gap. We came at least very close to it with price highs above 161.50, which posted during the June 20 trading session. But then from there, it was just a continued collapse. And this stock really started to see these losses even before most of the market started to sell off. So there were several warning signs in place here. And this was one of the reasons that we were pointing to this prior resistance zone here at 161.50. So, currently, a large amount of damage has been done to this chart. What we can really see is that, several Fibonacci retracement levels have already been broken, and some of these were just completely gapped over. We didn't even really test the 23.6% Fibonacci retracement. That was a little bit of an attempt to start to stabilize near the 38.2% Fibonacci retracement, which came in at 141.51. But this was really a very weak response here. And we did start to see evidence of new resistance levels developing with this 20-day exponential moving average, which is this yellow line here. So, bounces from here were minimal. We did try to find some support here just above 130. Just below 130. 129.90 would be the 50% Fibonacci retracement level that comes in during this time period. But then the declines just continued to develop quite sharply. So the top was already in place for the stock prior to the July 11th trading period, which is something that I've discussed in other videos. I feel that was sort of the turning point of the market for the summer trading period. But this stock was already in trouble before that occurred. So currently what we're seeing here, we've clearly broken this 50% retracement level and the 618 retracement, the 61.8% Fibonacci retracement zone, which came in just above 118, just below 118.30. So currently, there's not much holding up this stock at this point. What we can see is that, we're attempting to find some support here at this rising blue line, which is the 200-day exponential moving average. For me, that's generally not enough to take a trade. I would like to see a bit more than that. Some more technical evidence, some more chart evidence, which suggests that a true turnaround might be able to unfold, might be possible. But we're not really seeing anything else here in terms of, historical support zones. This really doesn't start to occur. We don't really start to see any historical support here until we go back to this would be the March 18 trading session where the lows came in at 104.66. And then we can compare this to the 786 retracement, which is currently found at 101.74. So, roughly this 102 to 104 level would really be the next level of support if we do lose this rising 200-day exponential moving average. But it's not. It's still looking very heavy here because, as I said, there is no immediate historical support here, and really all we have here is this 200-day exponential moving average. And then in addition to that, what you have here is a declining condition in the relative strength index. That would be this purple line down here at the bottom of the chart. So as we can see here, there is a dominant momentum reading here, which does suggest that that negative momentum is still controlling the stock. We're even starting to see the exponential moving average of the relative strength index start to roll over, and point in the downward direction. Sort of at this point, the only encouraging news here would be that, we are starting to roll out of oversold territory. That on its own is encouraging. We can kind of point to that here a bit. But we will need to see a few things occur here. I mean, we will need to roll out of oversold territory, and then not only will we need to break above the RSI moving average, but we'll also need to break above this declining trend line as well. If those two things can occur, and we can maintain support at this 200-day exponential moving average, I would start to have a more encouraging view of the stock, because at least we would have a few different pieces of evidence to use from a trading perspective. But a few different things need to happen here in order for all of that to be true. So currently to the top side, the immediate resistance zone that we would be facing comes in at 129.87, which would be the highs from July 22nd. This roughly coincides with the 100-day exponential moving average, which is found just above 126. And then from there, you'd really be looking at the remainder of the exponential moving average cluster, because this would, fall closely in line with this descending trend line that we're seeing from these all-time highs back here. So, currently, what we would really like to see ideally would be a break of the 134 level. If you are able to see that, then, that is really the event that would take pressure off of the downside. So, currently there's a guarded outlook here. It's not 100% negative, but there's really not much holding up the stock at this point. So trade with caution. Here's the current market analysis for DELL Technologies Incorporated, stock ticker DELL. Conviction investment strategies are characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.